Welcome back to another episode of the Blitz Break. I'm your host, Phil Rasmussen, and we're back here on another Friday morning, coming to you live with some mortgage and real estate conversation as always. And as usual, here with the crew, Mr. Howard, the dressed up, the Texan that looks very Californian. Yeah.
Did you notice my shoes? I mean, come on.
You look very fancy today.
They're not white tennis shoes, though.
This is true. And Justin Ingolia over here. And,
didn't wear his boots.
I didn't wear my boots, and I broke from the white tennis shoe today.
Okay.
I stayed in character here.
Yeah, consistency matters.
That's right. And back with us again, mortgage industry veteran and multiple book author here now, Mike Miklaus.
Well, we're getting close to multiple books, but definitely enjoy being back and having some conversation about the mortgage industry and scaling and real estate, because you guys do such a fine job that I love feeding off the conversation with you.
Well, we're excited to hear about this second book, so that's going to be a big topic.
Yeah.
But before we get into it, I just have to say that I have a personal beef with you still.
Okay.
I like this. This is my favorite way to start a podcast. By the way,
should we move the table for the wrestling match?
I have not received a message from my boy JP Howell to let me know that he's been tossed out of any of the Jesuit high school games by you in your umpiring duties, and I think that's a major fail on your part.
He must have listened to that first podcast, because the only Jesuit game I did after you and I had that conversation, he was so far in the dark reaches of the dugout I could barely see him.
He hid.
I know you can. There's no throwing out Coach Patolny, because he doesn't know how to do anything to get tossed from a game. But
Coach Joe is such a gentleman. His new coach that he's handing the mantle to certainly has had his share of run-ins with some of our officials, and so it'll be an interesting season next season without Joe.
I'm waiting for the text from JP to let me know that he got run from a game and be like, that's me. But
it's hard to get run, though, when you're up with the pitchers at the far end watching them warm up.
You have to do
that's impressive.
something.
He and I have a hard time keeping our mouth closed about anything, so I'm sure he could find a way. Yeah. So,
ironically, some of you may have seen, I don't know if any of you did, the post that I had where I was basically grill to grill with one of the Roseville coaches during the playoffs.
No.
Yeah, there was a NorCal regional game, and the Roseville high school dugout was really crossing the border in terms of appropriate behavior. And finally, on the half inning, I think it was the fourth or the fifth, I went in and basically went past Eli, the head coach, to the head coach that was supposed to be the lead coach in the dugout. And I basically had a conversation with him and said, look, you and three other assistant coaches are going if you don't take care of what's happening next to you, because if you're not going to do it, then I don't need you here, you know?
Yeah, that's right.
And he responded appropriately, and things settled down, and we actually were able to
you don't have to go into detail. What were the kids talking smack? Were they doing?
Yeah, the high school rules say you can't direct negative comments at the other team. And so when you're...
What's the fun in that?
Yeah, I know. But when you're saying, why are you smiling, blank, blank, you just got shelled and things like that directed at the pitcher.
Yeah.
A guy like Phil would probably throw one into the dugout, just slipped out of his hand if that happened.
Well, just a little outside.
Just a little outside.
You're acting like I ever got shelled. I mean, I don't think I ever gave up a hit.
I don't think you ever got shelled.
In my memory, I don't think I gave up any hits in my
no
career.
Hits,
so,
ever.
Yeah.
Never, ever.
I think there's a record or something, is there, where you no hit in your entire career?
Lots of no-hitters in perfect games on the reel, but in my mind, I don't think I ever gave up a hit. So I prefer to live in that fantasy land, too.
Well, and that's what I love about pitchers, is because to be a pitcher, you're always focused on the next pitch.
Right.
And one of my favorite expressions, and I've used it when I talk about mindset, is that the furthest distance is the 6 inches between your ears.
Yes.
And occasionally if a pitcher's struggling, I'll whisper that to the catcher. I'll say, hey, go tell your pitcher, to settle down. The furthest distance he's trying to throw is the 6 inches between his ears.
Yeah.
And if that kid is a thoughtful, well-coached pitcher, he's going to settle down because that's going to resonate with him.
Yeah.
You know, that kind of thing.
Well, speaking of that, just on topics, this is a little deeper into that whole between the ears conversation. But I was just recently watching several videos on YouTube on Rick Ankiel and kind of him now years later coming, and talking about what happened. And for the audience that doesn't know, right, he was a left-handed rising like rookie star pitcher for the Cardinals, and in a playoff game he literally had the yips and forgot how to throw a baseball.
Yes.
Like forgot how to throw strikes and literally threw 5-6 wild pitches in one inning, and then from there on out completely lost the ability, just like Chuck Knobloch back in the day, like to throwing the ball from second to first. But I watched some stuff on him, and like hearing him describe it 20 years later and his really crazy story of coming back as an outfielder and having a cannon is a cool comeback story. But talking about like literally losing all feeling in his body and being in front of all those fans and being unable to throw a baseball that he had done his
Amazing what the
entire
mind
life.
will do.
Like it is incredible when you hear people that have experienced that really, really high level of like meltdown in the brain.
It's
right?
a meltdown. Yeah, it's just a shutdown, meltdown, however you want to say
Well, I'm
it.
excited
It
to-
just, that
my-
block comes in.
My son, Austin, just got approved, is going to start coaching over at Bella Vista, the baseball team. Not the varsity, but he's going to work his way up through. And so he just got approved, and
That's cool.
he's very excited. It's where he played baseball.
Well, that is really cool.
And so he's been really wanting to get back into it, and so yeah, he got approved and doing all of his classes and everything.
Who did he play
preparing.
for at Bella Vista?
The coach there wound up. He actually moved and was coach at the Rangers.
Was it
Joe-
Bill Richardson
Bill
back in the
Richardson,
day?
Yeah,
I was gonna say,
yeah.
Bill Richardson.
He
I know.
was, yeah,
What years did he play?
he played. Let me think. He is probably 2006, 7,
Okay.
8. When they won all the championships.
Yeah, after Bill was well established,
Yeah,
and I was
and-
back umpiring. Yeah.
Yeah, they won all the championships there. They were tough.
Yeah, Bill
And,
Richardson was he
was
was
a
actually
good-
my dad's business partner at Athletics Limited
Yeah,
back in
he's
the early late
good.
80s.
He's a good coach.
Great guy.
They had a great team. Austin was one of the pitchers, and it was really kind of weird because we all the way from T-ball to through high school. Austin he played year round. I mean, year round. Travel teams, all that. High school pitcher, championship team, and when it came, the recruiters started coming, and the summer between his senior year and him making his decision, it was like, yeah, I'm not going to do it. I'm not going to go to college, and just kind of dropped it. 3 or 4 of the other pitchers on that team wound up in either they all played college ball. They all went to
I remember those teams.
pro and semi-pro, whatever levels. I'm not the biggest baseball aficionado, but he was right there with him. He could have done a lot in baseball, and he just lost the interest. And then
happens,
over the last 15 years, it's like he started doing some coaching and doing some other things, and the passion is back now, which is kind of nice, for him.
That's fun. Yeah.
He's done a lot of struggling in the last 3 or so years. He had brain surgery and some other things.
I remember that.
And so this is like it all of a sudden it's like, you know what? I really loved it. I wish I didn't stop. I want to get into coaching, and he's even, going to start playing on a men's league again. and some other things. So it's like all of a sudden,
See, the
back
brain-
at
the brain
35.
surgery- the brain surgery worked.
If he has, if Mike umpires a game or two, he might lose the passion real quick again. So,
Well, I'm pretty sure I umpired when Austin was playing
Probably,
at DB.
you probably did. Yeah.
But,
you had to have umpired when I was
I
playing.
easily umpired for your era as well. Yeah, I've been doing it a while.
Yep.
2013 was my pinnacle.
Okay.
2013 was when I signed the contract with the Pacific Coast League and worked 6 River Cats games. And
That was amazing, huh?
So I can tell my grandkids that I was a professional baseball umpire, But in fact, I still have the PCL hat. And it was kind of funly. Shout out to Jason Hampton over at Good Life. Those people, the great people that do construction repair and stuff for our realtor partners and a great vendor. He came by to visit yesterday and have a conversation about termite reports and when Section 1's required, when it's not, and the whole issue, which is a legitimate issue, that in many cases now, the easiest way to close the deal is to get a seller credit to the buyer, have the termite report never see the light of day as far as the underwriters, and then what happens is you've got a $4,000 problem that deferred could be a $12,000 or greater problem in a fairly
if they
short
don't
period
take
of
care of
time.
it immediately.
Exactly.
Yeah.
And so he wanted to know how he could better educate realtors about that, and we were having that conversation, which was a great conversation. But he saw the PCL hat and shot a picture and threw it up on Facebook to say he was visiting with an old umpire. And I went, wait a minute, what do you mean old? I'm working tomorrow.
Well, what do you think about the use of AI now and all of the different things you're seeing on these Major League Baseball, games?
Well, we're not talking AI. You're talking about the pitch tracking and all that?
Yeah.
pitch tracking.
That's not AI?
No, but it's not. But, they started using that about 10 years ago on an experimental basis and keep refining it. But they had it at the University of Pacific, and I actually enjoyed it. When I'd go down there and work fall ball, less stressful games, I'd bribe the kids that were doing the filming and marking the pitches with a couple of hamburgers and a soda to track which ones it said the umpire missed. And then after the game, I would go up into the box and they'd have it cued for me, and I could actually watch pitches that I might have missed or that the Quintech program said that I did. And it helps you get better. So fast forward that to today and to the professional umpires that are out there, there's only one umpire that's visibly and notably having a problem with it, and I'm not going to throw his name out there and throw him under the bus.
I know exactly who it is. I see the videos all the time.
I think all of us know.
But he threw a heck of a fit after he got challenged on 3 pitches that all got over, and he got overturned 3 times in a row in a particular game recently. And but the reality is the umpires are so good at calling balls and strikes that it's almost the difference between being number 1 on the PGA Tour and number 20. You're talking about tenths of a fraction of a pitch difference between those guys. Their accuracy ratio is like 98.6 down to 96.7. I mean, it's a very, and so if you're missing literally 3.3 pitches in 100 pitches, I mean, and considering how fast they're coming and what the margins are that we're talking about for a miss, I think that just speaks to the training. Yeah,
that's what you and I've had this conversation too about how impressive it is, and I think to the layperson who doesn't really understand, seeing how many pitches aren't missed by the umpire it's impressive. It's incredible actually, and then some of those that how are you? It's nicking the strike zone, and at 100 miles an hour, and you have to call that.
And the reality is, it's a 17-inch plate, and if you consider any part of the ball to any part of the plate, you're really dealing depending on the visual setup of the umpire and what he's comfortable calling.
Yeah,
you're talking about a 20 to 21 inch wide box that is defined at the top by the lead elbow of the hitter, which is usually the mid-sternum, down to the nap of the knee. So the inside and the top of the zone on a well-qualified umpire already defined by how he sets up for each pitch, dependent upon the batter, and then it's really the only other out or two edges. So it's really not, a lot. But, umpires need coaches and training, just the same way players need coaches and training, the same way realtors and lenders need coaches and training. And you and I talked about the fact that we were both there at a fairly early stage when the stages were delivering the mortgage papers.
Yeah.
So I brought you a gift.
Oh.
And this is as good a time to present it to you as any. But, the OG of coaching, of course, is Todd Duncan for the lending business, and that's a signed copy of High Trust Selling just for you, Buzz.
Well, thank
just
you,
for you
so much. I used to go to all of Todd's training events, and it's been a long time since I've seen him.
Yeah,
35
years he's been running training programs, and we can probably still get you into the Dallas event in October if you need it.
Well, back when Pratt was with him. Do you remember before it was just Todd, it was Pratt and Duncan.
Right.
And so I started going to seeing him when it and I can't think of Pratt's first name.
I can't either. Bill came to mind, but I know that's wrong.
Anyway, so before Todd went out on his own, it was Pratt and Duncan, and we used to go to all their things, and so thank you. That's amazing.
It's also cover signed by him. So.
Awesome. Thank you so much.
Yeah.
Appreciate you for that.
Well, I'm gonna on that topic. I think it's kind of an interesting deal with the strike zone and the pitches. So, what I think doesn't get talked about enough with that technology, right, is that where it actually helps is on the competitive pitches. There's a whole, like if there's 150 pitches in a game, right, there's a good percentage that are not competitive pitches, that are not really on the fringe, that are very obvious. So there's the ones that are the competitive pitches that are nipping the edges of the strike zones, that are the ones where you need those incremental improvements, and translating, that over into, kind of on the mortgage and real estate side. I think really specifically the professionals and the people that we, talk about a lot on this show, right? That's the actual lane where the growth is supposed to be happening for everybody right now, right? It's in the competitive areas and the fringe areas. Like, you hear people talk about different scenarios when they get loans through a system, and this one's difficult, that one's not. And a lot of times they're talking about the extremes, but really where the pros are made are the ones that are right in those gray areas, like underwriting, the gray areas of interpretations of guidelines. And
right, the competitive edges.
Yep. I think it's a really quality comparison between, in life, right, is that ability to differentiate in that gray area.
And everybody talks so much about how chat's going to replace a lot of that because it gives all that information out. And it's true, our consumers have a lot of that information, and we may want to have that conversation as this progresses. However, the real important thing is that if you're a mortgage professional, you need to be studying the guidelines. You just need to have enough awareness, if nothing else, to know where to look. You can't just, to me, chat GPT, what's the guideline on an IRS settlement payment plan is kind of like phoning it in. You might get the information quickly that way, but, do you know that the IRS requirement used to be that there was 12 months payments after you have a settlement plan, and that Fannie Mae just changed that rule. And now if you are in the process of submitting a settlement plan and it's been submitted and you have evidence of that, that can be used to still move a loan forward. Yeah. Well, that's a major liberalization of the Fannie requirement. Came out this week. I know you guys are aware of it, but how many of our loan officers know that? Or how many of them took the time when the Fannie Bulletin came out to just change an IRS settlement plan guidelines? that might be important for me to know.
Yeah.
Yep.
And if they take ownership and say that might be important for me to know, and they're a thumb pointer instead of a finger pointer, that's somebody I think we both want to talk to as recruits to bring on our team.
That's right.
Without question.
The one of the things too is the more legacy you are as a loan officer, you tend to hold on to certain guidelines and thinking that, oh, I'm sorry, you're on a IRS payment plan. Oh, that you do you have 12 months payment history, not knowing that has changed, and you get kind of stuck in the mud, and you could be losing deals and not recognizing that has changed. So the importance of always being on top of it is huge.
And that's the same loan officer that doesn't have a Facebook or an Instagram
Yeah.
page, right? Because I'm not going to do that to attract clients. Right?
I love it.
Yeah. I mean, you either adapt or you die.
That's
you
right.
know, you're either green and growing or you're ripe and rotten. And if you're stuck in that ripe and rotten mode, I don't care if it's guidelines mode like you just described, or how we
technology
or use the technology to create the law of attraction. If you're not adapting with the speed of AI at this point,
That's true.
then you're not going to survive this business 12 and 18 months out. AI is not going to replace loan officers, but loan officers that use AI are going to drive the hobbyists out of this business.
Without question. Well, the competitive advantage of having more time on your hands to invest in the impactful, activities, conversations, relationships that you should be having is obviously the most critical benefit. But I've said this before, and I think I'll throw this question out because the industry is always, in my opinion, not that this is exclusive to mortgage and real estate by any means, but recruiting creates this just insane amount of noise for loan officers to try to navigate what do they need, right? All these shiny objects of things that are being promoted as the next thing, and you need this, and you're not in, and kind of fear mongering if you don't have this, or there's all of that people have to process. But self-awareness is a key to success for all of us in life. And I think the question that I find the most critical for loan officers that are trying to be successful is to really be self-aware of what do I need to be successful right now? What do I need to get better at? What am I lacking? What can I use help with? And then to be able to be grounded in that in terms of determining where they align and how they partner. Because, if you jump on any social or, mortgage event, there is just so much going on. And I can't tell you how many times I talk to people that have chosen to go to companies for a whole bunch of things that they were told were important, but none of them were actually things that were relevant for their individual success. What's your take on, today's world and, being in the business as long as you have, just the way the industry goes about recruiting and advice to loan officers that are trying to find a place that's going to help them be successful?
I think, and I would imagine that you agree, that having authentic conversations in terms of how you do business now is the most important question for that loan officer. Because if that loan officer is coming in to you or to me and they're saying, well, so-and-so just promised me this, that, and the other, or they're going to give me, remember a couple of years ago, they're going to give me that signing bonus of X dollars, essentially to handcuff me for the next 2 years to 3 years to that company or whatever.
Well, that's back, but go ahead.
Okay.
Now it's
well,
5 years though.
I haven't seen that yet, so I must not be on the bleeding edge of recruiting right now. So, but what I have seen with those situations is that they went for the shiny object like you just described, Phil. They were promised something. Was it a CRM that's going to give them 5 phone calls that's guaranteed to give them a lead every day, this and that? And then they go over there, and then the realization is, well, the tool can't give you that because you've been in business 3 years or 30 years, either one, but you didn't take and maintain your garden. You didn't treat your database like a data bank, and you've lost once it's actually uploaded into whatever the system is, if it's garbage going in, it's going to be garbage coming out the backside. And that's on that loan officer that came over.
Yep.
And so if they don't have the disciplines in place, then they're looking for another reason other than a look in the mirror as to why it's not working where they are now. It's kind of like somebody that's been divorced 4 times. If you notice these people that change jobs a lot, it's kind of like being divorced 4 times. After the 4th time, you might get the idea that maybe you're the ingredient that these marriages aren't working, right?
Yeah, let's look at
You should.
But nobody
You'd like
should.
to believe before the 4th, even.
Yeah,
but,
actually, that's probably even better.
But the point is, they're not going to should on themselves.
Yeah.
Okay, they're not going to take ownership.
That's right.
And ownership is fundamental to being a business owner. And every loan officer and every realtor that chooses this profession needs to understand that they are in business for themselves and that the marquee that's behind them is their support system. And there are some very good ones out there, like a Big Valley, but the reality is it's only good if they do the work.
That's it.
If they engage.
If they engage. I just lost the thought I was going to share on that subject, but it's so important, I think, that when you're having those recruiting conversations, that you stay, as we do, in an attitude of curiosity and explore the real motive behind why they want to change and what they're about, because anyone can be motivated for a brief period of time. You can get all excited. In fact, I want to excite my team, so I'm taking them down to the Mortgage Mastermind Summit here in a couple of weeks in Las Vegas, because that's a great annual event, right? So we'll go down there, and they'll come back pumped up, of course. But the reality is, a week later, they're not going to be at that level of motivation. They're going to fall back to the level of their disciplines and their practices. So my job in terms of being a good leader is to hold myself accountable, and then in turn hold them accountable for those practices that are the best practices that continue to allow us to be successful in a marketplace that's highly competitive.
Yep.
And where the client thinks they should be asking about rate, because the client we've also educated incorrectly, and they don't understand the value of receiving the advice, or that our relationship with them is chapter 1, unless we're able to explain the value of our service, because there's a big difference, as we all know, between value and cost.
Without question. The ability to understand as a loan officer what your strengths and your weaknesses are, what your skill sets are that are instinctively your go-tos, your comfort zones, and where you need to grow. I think a lot of people that are successful have some of that, right? And there's certainly plenty that don't, but I'm often struck by how quick people are to cave on those principal ideals of what they need because they get distracted, right? So I think there's a discipline element of staying true to long-term success versus short-term, kind of shiny, cool, fancy new ideas. But I understand how people can get caught up in it because there's so much being thrown at them about, oh, you need this to be successful, you need that. And there's truth in parts of it. But, when you have, if you're a loan officer and you're producing, you're getting 50 recruiter phone calls a week and everybody's telling you this, it can become exhausting, right? And I think it goes back to relationships and trusting that you're working with people who are going to support and help you, not only with what you're aware of, but help you figure out the other places that you need to grow, and maximize at the end of the day the value that you're delivering to the customer. To your point, but it's curious for me because I'm going to Mortgage Mastermind as well for a couple of days.
Oh, good.
What's your what's your take? I mean, you've been doing this a long time with as this industry is evolving, as you know, AI just accelerates and all the, what do you think is the key thing a loan officer should focus on to be successful for the next 5 to 10 years, despite all the noise and the chaos? What would you say was the key thing a loan officer should stay with?
Relationships. It's easy. Relationships. If you have relationships with realtor partners and they trust you, they're going to refer you. If you have relationships with your data bank, the people who have served you in the past, and you stay relational with them, then they are going to refer you. They may not need your services for 10 to 12 years, but they will have a family member, a friend, or a coworker who will. And we this business is so simple when you really think about it. And Phil M. Jones does a great job of explaining it. Nobody buys a house. And I think that when you had Ricky O'Neill on, he said the same thing. They buy a house because,
Yep.
Are they downsizing because the last child has graduated? Is there a death, a divorce? Are there diapers, diplomas? All of the D's that are covered in all of the, Keller did a great job in putting those in his books, and then there's the R's, retirement and relocation. If you are in a relationship with your clients, you care about those things. If you're in a relationship with your client and you have a data bank of say 300 people, because you've done, let's say 20 loans a year for, over 10 years, even though you may be a medium producer in the lending world at that point, those 300 relationships or 200 to 300 relationships, I absolutely promise you, if it's only 200 in your database, I absolutely promise you that those 200 people know about 20 transactions that are going to occur this year. And the clients all tell us in the surveys that they like us, 74%, 80%, you've seen the studies. And yet the practice is that less than 15 to 17% actually go back and reuse the lender or the realtor that they had before. Well, if they like you and they're not using you, that's because you fell out of flow. You're no longer in a relationship with them. And you can drip on them for as long as you want. You can be an Amazon rainforest of drips in terms of emails and texts, okay? But if you haven't picked up the phone and had the conversation so that they recall your voice and you can have a genuine chuckle or a compassionate, sorry to hear about that, relational conversation with them about their family, about their occupation, their recreations, or their dreams, those principles are foundational. If you haven't done that, then why are you upset because they went someplace else? Because you didn't keep the relationship.
And even worse, and I'm going to take the LO out of this and say most salespeople, they don't even use the drip systems. I mean, they don't even go as far as be in the rainforest of,
but AI is going to do that for you.
Nowadays, most of them, a lot of them do if you set them up.
Yeah.
But I can almost guarantee you that the majority of salespeople don't even take the time to go in and set up those automatics. And that's one of the problems for a lot of loan officers, and you'll recognize this statement that, we've hired so many people over the years, hundreds and hundreds, and, you bring them in and the first thing you say is, hey, let's get your database. We're going to make an announcement. And it's one of the saddest things is to find out that, this guy, he's been pretty successful. When you really press them and say, let's get your database, they're going, well, and you start hearing all these excuses. Well, I've got some of them written down over here. Let me get that, and I've got this. And what you find out is that a huge amount of salespeople really can't put their finger on that data bank that you're talking about. I like that term, but they can't put their fingers on it to actually get it into the systems that will just drip on them, automatically. So there is a huge issue with salespeople on those that have the ability to continue those relationships and those that really can't, because they just didn't take the time to even care about the follow-up.
And what's interesting is when new people come in this business too, and you talk to them and you say, these are some of the best practices. You need to have conversations, because conversations lead to connection. Connection leads to contract. So you go in with an attitude of curiosity. You do those things, and then you ask them, now, did you record that? In other words, did you write it down? Do you know who you spoke with? And it's, well, like, no, I didn't want to press. We are in a world where people expect, in exchange for information, to give up their name, their email, and their phone number. Mm-hmm. We all do it. So if you think that by asking those things you're offending someone, you're probably not going to make it. You're just not. And so I recently had an opportunity to speak at a sales meeting for one of the EXP teams, and they had a bunch of the newer agents there. And I was talking about the importance of being relational and getting consistent. If you have 200 relationships, again, and you're working 20 days a month, just to pick a number, then you ought to be able to make 10 calls a day and stay in contact with your entire relationship base. And a couple of the young agents up front, they're like, well, what if you don't have any contacts? What if you don't have any of those? And I said, I absolutely promise you that you have 5-fold those. And one of them challenged me and says, no, I don't. And I said, do me a favor, please get out your phone and open it up and tell me how many contacts you have. And she quietly said, 1,143. At which point I said, I rest my case.
Yeah.
Yeah, that is, the idea of you grew up, you have a family, you have a life, you have friends, you have a network, right? Like that. Yeah. That's the foundational piece. The thing that we're touching on, though, that I think is what really now, I think in particular, we're coming out of what were bad habits that were caused by an abundance of business in that really, really lucrative wave of, that 18 to 21 window, where there was so much going on, and it was so easy, and it became very transactional because there was so much to happen that you were just constantly in conversation about deals. People forgot how to think about ways to create value in conversations with clients long before they actually needed to utilize the services. And the number of times that I've had conversations with loan officers who are not actively contacting their database, but in part it's because they literally don't have a reason to call that they've been able to muster, that isn't just to check in and find out, because they got to that habit. And you have to have something valuable, which means you got to put some thought into, why am I calling, to actually make your life better.
Well, and let's visit about that really quick, because you're absolutely right. And if I'm calling to say, hey, has anything changed in your life? Do you need to refinance? Then I'm making.
That's not a relationship.
I'm
by
making
the way.
No, that's not a relationship. Yeah. That's I need a closing this month, and I'm looking for someone who will fill my needs. Mm-hmm. That's the opposite of why we should be calling.
That's right. Exactly.
So if you haven't already, my plea to every loan officer and realtor out there that wants to stay in this business is go through your phone and slowly but carefully, 5 to 10 a day, look up the people in your phone and friend them on Facebook, follow them on Instagram, and start to see who those people are that are in your phone that you maybe even have forgotten who they are. because that's where it starts.
Yeah.
And then when you go to make the phone call, if they follow you or friend you back on Facebook and you see that they just got a little puppy, or their 19-year-old dog died, or their daughter, the last daughter, just graduated from high school and is about to head to the University of Santa Cruz and become a snail slug or whatever they are down there. Banana slug. You can now have a reason to call. Hey, I kind of got out of the flow of talking with you on a regular basis, but you appeared in my feed in Facebook, and I saw that Bridget is graduating and going to Santa Clara College or going to Santa Cruz College. And I just want to call and congratulate you. Good job, Mom.
Well, and that's so true. And, so many people think of, like especially newer people in the industry, they think of when you say, okay, we're going to start working on your data bank. And they say, well, I haven't closed any loans. And there's this mentality that a database is only for people who I've closed loans with. And so I like to teach when I sit down with a new loan officer or new person with Big Valley, and I put a dot and I say, okay, we're going to talk about your database. This dot, that's your mom, dad, brother, sister, grandma, granddad, aunt, uncle. These are all people that if they're doing a loan, they should be coming to you. People say, well, I don't like working with family members. And it's like, why is it you don't like working with family members? Is it that you don't give good enough service that it's going to create a family problem? Because that's an issue in and of itself.
Or you lack confidence.
And so, then I start writing these circles. I said, you always have, I know you've got 3, 4, 5, 6 best friends. Who are they? There's the first circle. You should have their phone numbers and emails, and they need to know what you're doing. I said, then you start writing these concentric circles that go out. It's like, okay, so are you a member of a church? Okay, what about all those people? You should be talking to them if they're truly members of your church and you see them. What about at your gym? What about the girl that does your hair? What about, all of these people? That's what building a database and a network, and I almost like to call it a network better, because that's what building a network is all about, is showing people that you care about them, like you said, and following up with them and offering a service that they desperately need. And that's what it's about. And I say this, and excuse my language, but I always tell people, you have to be a database whore on a day-to-day basis when you come in contact with someone. If it's, you take your car over here to the dealership to get it worked on. There's a guy that's interfacing with you. He's taking care of your car. He's calling you, hey, your car is ready. He's the one that's probably got it washed. He gives you his business card. There's the start of a relationship right there.
Right.
Because you should be emailing him saying, hey, Bob, you took care of me yesterday. I really appreciate that. I'm in the mortgage industry. If you ever need mortgage help, I will take care of you the same way. I'm going to add you to my database, and keep you updated and invite you to some of our events. And, I want you to have a resource like I have in you. And, I mean, those are the kinds of things that's how you build a network and you get more business.
I think one of the key distinctions I want to go back to, and one of the things that I think we need to define, is the relationship. You touched on something that people think that they're having a relationship by reaching out when they need the commission, when they need the, hey, do you need something from me? But to go to Buzz's point, I think it's a really good defining characteristic of building that relationship is you paid a compliment. Hey, thank you so much for taking care of me. Not only did you take care of me, I want to take care of you. Here's my service. And that's something that I will promise you. We're starting to have relationship language and true, for lack of better terms, companionship that you're creating with those people. Hey, I saw your youngest daughter is now going to Santa Cruz. Good job, Mom. You've created the relationship. That's truly what the relationship is. And that's actually like what we talk about. And I feel like not having Julie here, we're at a little bit of a disadvantage, but it's the impact that you have on people's lives. We get to, one of the funny things I get to tell people all the time is being a lender or being a real estate agent, you get to be in relationship with people, and you get to be a part of one of the biggest chapters in their life that they will remember forever. It's typically having a baby, getting married, and buying their first home. And so if you get to be a part of that, that's something that you're already in a relationship with someone that's going to expand way longer than that dealership relationship. But if you're not capitalizing on it, or you're not recognizing the key importance and the role that you're playing and the impact that you're having on people's lives, then you're doing yourself a disservice, and you're also doing your customers a disservice, because you're depriving them of that relationship and what you have to offer. I think, I don't know. It's just something that obviously I'm a little bit passionate about, and I think you are too.
And you are, and think about, and it's the right passion, because think about the calls that we all got when we were newer in the business, and we can still get them today, but the way we handle them today is probably materially different than what we used to. I mean, the thing that'll freeze a loan officer that's not prepared, who hasn't scripted in their mind how to handle a conversation with a client that wants nothing but what your rate is. Okay.
Yeah,
we've all had that call, hey, what's your rate? I want to know what your rate is. Well, okay, I appreciate that. Let me start here. Interest rates are anywhere between 6.5% and 7.25%, depending on your credit profile. But before we get there, let me just say, if rate is the only thing you want out of this, I suggest you go to bankrate.com. They'll usually tell you who the lowest of the day is. And if you're going to lock today, grab that one. Because if rate is your only consideration, I'm probably not your lender.
Yeah.
Now, if you want to have an appointment to have a genuine conversation about what your objectives are in buying this home, selling your prior home, and how you want to structure the next several years of your life so that you can be successful at purchasing that home and either maximizing leverage or maximizing your opportunity to increase equity to a point to where you can comfortably retire, I would love to have that conversation with you. If you're not interested in that conversation, then I'm not your lender.
And that takes a lot of guts and confidence.
Well, it takes abundance, which takes the discipline to build up enough business that you're willing to walk away, which is what the customer experiences, is that I'm successful enough that I'm willing to walk away from the client that isn't a match. Yeah. And, was just having this conversation yesterday with somebody, and we were talking about loan officer assistance and support and creating bandwidth. And I said, there's a very big difference if I create more time for a loan officer and they go use that time to create more relationships and more transactional opportunities.
I'm smiling. I knew where you were going.
then that is the best investment of time. But the number of scenarios where that doesn't play out, where the loan officer doesn't leverage that time to create more abundance, creates the opposite effect. And then they're never creating so much opportunity that they are always trying to convert that client that isn't the right fit. And they're trying to just hold on to what they keep instead of continuing to go get more. And, the industry is interesting to me because I've always used an analogy from a loan officer perspective, because there's so much historically in the technical aspect of it and then the sales aspect. And, you've got people that are kind of on one end of the spectrum. They're the mechanic that builds the car from A to Z, knows the name of every part, puts it together, greases, like they're going to build that entire thing before they're ever going to drive it.
Yep.
They're the expert and they sell through expertise. And then you have the other end, they have zero idea what kind of car it is. They don't know if there's brakes, but they're going to hit the gas pedal and they're going to go 150 miles an hour and hope to God that the wheels stay on the thing, and they're going to go sell. And really, you want to find the true elite people are somewhere in the middle with a heavier sales, kind of tilt. But the people that are really kind of averse or maybe in their comfort zone, don't go out and sell, oftentimes don't understand that you need to go create so much business that you get to make those choices and not be chasing the wrong type of client.
Well, it's not so much that you have to create so much business. We all have a different thermometer of business in terms of what we're comfortable at.
Very true.
We've all had loan officers that hit a threshold, doesn't matter what it is, 120,000 their first year or their 10th year or whatever, and then they get stuck at that level and they can't seem to ever surpass it because they have this mental thermometer that that's all they're worth. And so having the conversations about scaling sometimes it's as important to get into their internals in terms of what's their passion, why are they in this industry in the first place, and what is their self-identity in terms of what they're delivering to their clients. Because if they can reshape that or see it from a different prism, then they can have that breakthrough to go to the next level. But that takes some interesting and sometimes several conversations.
Well, it's like we're back to the pitcher, and the biggest distance is the 6 inches between their ears.
Oh, absolutely. Yeah. One of my loan officers had a loan that they've been working on. It's a self-employed borrower. We did the bank statement situation. They understand what they can afford, and then there's still this reticence to go buy. And she's been working with both the bookkeeper, CPA of the client and the client. And well, now the client has mattress money, literal mattress money. And she doesn't know if she wants to put it through her mom's account so they can rent it off her now, or whether, in the gift procedures we can do, or if she wants to put it in and wait a couple of months. Well, she didn't want to do that because she didn't want to put a large deposit into her own bank account either. And then that, of course, sends up a red flag for me. Yep. So I said, well, what they're saying to you is that money, may or may not actually have come from being a consistent saver in their business. And I'm not here to judge anybody, but what I do want to know is as a representative who's going to have a loan officer's name on that file, I want to know that the background of it is legitimate enough to where we need to know that borrower better.
Yeah.
I said, so here's what I would like you to do. I would like you to go back to that borrower and say, I'm hearing from you that there's some resistance to putting the money into the bank. I would like to understand that.
Help me understand that.
Help me understand that just a little bit more. But in addition to that, is there, because this is the second issue, this is like the second hurdle, is there anything else that's keeping you up at night about buying a home?
Good question.
Because I want to teach my loan officer that there's always a reason, and then there's the real reason.
Yep.
Same with our people when we're recruiting and we don't get the recruit and they go to, name whoever
company,
loans. Okay. And the industry is consolidating right now. This is a time to be recruiting. I mean, the merger with Summit and Cross Country right here in our backyard is a great example. APM, your parent, acquiring Synergy. That's another great example.
That's right.
So the industry is definitely in a consolidation phase. And it reminds me of the banking industry, when I went through that process, which we talked about on a prior podcast, where we went from 110,000 banks to 4,300, and you can't find a bank loan officer that actually can quote you a home loan anymore. And that's because the front lines of mortgage lending is now the independent mortgage banker, broker, like a Big Valley, Integrity Team, powered by Success Mortgage Partners.
That's right.
We're the ones on the front lines. So how many of us are going to stay on the front lines, and how we do business is changing because AI is changing the tools that are going to allow us to serve more people, because they're going to help us identify which calls we should be making in our data banks because of propensity of factors. I mean, I listen to some of these people that are way smarter than I am talking about how they do that analysis now and how the systems do that. And I mean, we're way behind the old, let's just look at Facebook and see when Molly's going to deliver the baby. I mean, that may be a way to still have that conversation if you haven't been serving your data bank, but there are tools that are going to change all of that in the next 18 months. And whereas the social media explosion has taken place in the last 10 years, I mean, this new wave is compressing that to the point where
compounding.
Yeah. You don't want to be Studebaker making wheelbarrows.
Well, before I know that you've been on here before and you were talking about your previous book, but I understand when we were setting up today, you were telling us about your new adventure, your new book. So tell us a little bit, what's the title and where you're at with it, and how you said you've been working on this since October of last year?
Yeah, it's been an 8-month process.
So tell us about it, because it sounds really interesting.
Well, what I did, and this again comes back to coaching, and I engaged a personal coach, Ben Newman, and he kind of challenged me in part of his the coaches program that I went into, in terms of how I can make a bigger footprint in terms of communicating the values that we talk about that are important for our industry. And so he had read the chapter that I had in the Success Redefined with Jack Canfield. And he said, why don't you expand on that? He says, because there was a real impactful period in your childhood that put you on this journey to where housing is really important to you. And you need to be able to tell that story and then tell it in the fabric of how you build personal relationships that started in a fashion to where then you decide to build a business that led to you wanting to, after 30 years, literally take your business and close it down so that you can do more public speaking and encourage others. And so the book's called The Alignment Advantage, and it talks about how building trust and influence leads to a life worth living. That's the theme. And I'm excited about it because it took a lot of work, took a lot of soul searching. And after reading the advanced reader's copy, Ben's agreed to write the foreword for me. So I'm really proud of the fact that a national author with his book, The Standard, he's actually written 5 or 6 books, but that one was a New York Times bestseller. And then Patty Aubrey, who was the president of Canfield Enterprises, has already written my first cover note for the book and has been very supportive. And so just the affirmation of having people around the country that I've engaged in, again, building that fabric, that actually say, hey, Mike, you really should put your story out there and see if anybody will buy it. So we're going to find out.
So you said the title was
The Alignment Advantage.
The Alignment Advantage. Now, share with us a little bit. Do you have a publisher, or are you a self-pub? How does that all work today?
Yeah, no. It works however you'd like to work it. I mean, there are a lot of self-published activities out there. Albert Chavez, who's a friend of all of ours, he self-published his book and is marketing it locally. In my case, the project that I was first part of was part of Celebrity Brands, where they take a name author and marry them with other authors to put out a theme book. Mm-hmm. And Jack had written Success Principles 20 years ago.
Right.
And then
we've all read it.
And then he, every other year since then, he's done a collaborative like that where he's had co-authors. That actually was the last one he did. And then he retired because he turned 80 last fall, or 2 falls ago. So he's 82 now. And then at that same time, another friend of mine, Chris Sewell, who is up in the hierarchy of EXP in Michigan, similar to the Brent Gove of Michigan, he wrote a book with Chris Voss.
Oh yeah,
and so there's a connection with the never split the difference, and so I've got I'm reaching out to Chris through Chris, and And then, of course, Newman interviewed on his podcast, Voss as well. So I have connections to make some of those connections. And what I wrote about the alignment advantage is talking about that mindset, the fact that we do everything twice. If we're successful, first in our heads, and then we do it because we implement. And implementation and follow through are the two pieces that you have to have if you're going to go from fantasy to success or failure to success. You have to be willing to put yourself out there. You have to be willing to acknowledge failures and learn from them. I mean, they really don't hurt. You are not a failure when you fail. You have simply found one more way that doesn't work. And so take that opportunity and learn from it, because you're either winning or you're learning. And failures are nothing more than learning opportunities. Right. So if you keep it in a positive framework that, hey, I learned something today. I didn't lose that client. I learned something today. What did that other loan officer do that I didn't do? I didn't lose that listing. I learned something today. They went with that other realtor because.
Yeah.
Be willing to find out the because.
Yep.
I mean, and so that I got excited because that's what the book's about. And I've reworked it. And then it leads to, in the later chapters, if you do these things for yourself by serving others and keeping others first rather than your needs, always acknowledging the other person's needs. When you're making the phone call to talk to your data bank, are you focusing on your needs, or are you focusing on your clients and what their needs might be? Are you in a curiosity zone where you're going to ask the right questions about their family or the recreational activities of their kids? I mean, your son just got an opportunity to coach at Bella Vista. He's coming full circle from when he played there. Huh? That's a 20-year circle. How exciting is that?
Yeah.
If I was engaged on a phone call with you and you mentioned that to me, we would spend a good amount of time talking about that, because I care about your son and the mental issues that he went through and how much recovery he's had, because it's such a blessing, not just for him, but for your life.
Absolutely. Absolutely.
And that's where human engagement takes place.
That's right.
And if we do that, everything else takes care of itself.
It does. Yeah. You don't have to do.
And I think that's a huge point there, where most people engage, unfortunately, from what they need. They usually don't take into consideration the other person. And you see it in so many things in life, whether it's, movies or whatever, but they always portray it as someone not really taking the time to get to know the other person. Mm-hmm. They want them to know you. They talk too much, and they, tell you how great they are and all of that kind of stuff without really stopping and going, so tell me about your day. What's going on with you? Tell me more about your kids, because that's really interesting. Tell me, how did you get to where you are? And I mean, this is, and I think that one of the successes that we've found is bringing someone like you, and like, I'm really interested in hearing how you wrote this book and the process that you go through, just like asking, who's gonna publish it, how you do that, and I think he made a good point, or asked a good question earlier, like, are there somebody else writing this, off of your notes, or how does that work? And
well, in this particular case, the publisher is called Game Changer Publishing out of Dallas. Mm-hmm. They are a major publisher that they publish in the thought categories, neuroscience, motivation, relational topics, things of that nature. And Ben was good enough to introduce me to them. They have a contractual relationship where they help coach you through the writing, because you're not an experienced writer, but you do it yourself.
Yeah.
And by doing it that fashion, they have editors and a support staff that can help you with the the book design and all those things, so that when you bring it to market, it's a professional product that can compete in a national marketplace, as opposed to, you can also register for a self-published account on Amazon and do it yourself. And there's a lot of those on there. How successful they are or they aren't, it's like a needle in a haystack. Whereas if you go in, I went in with the intention that I want this book to be successful. I want to have a publisher who's someone that is recognized. If I'm going to invest my time, energy, and treasure in bringing this to market, I'm not committed to a failure.
Yeah.
And so that's why I've been so encouraged, because there are some nationally prominent people that have looked at the advanced reader's copy and said, "Hey, Mike, I'm going to give you a book note," or "Hey, Mike,
that's awesome."
In Ben's case,
and
I'm
this
writing
is
the
all
foreword.
your efforts. You're the one sitting down and, like you were telling us, you were transcribing, you were writing, you're sitting there typing in everything. It's not a ghostwriter working off your notes.
You write it off. I believe in writing
No, he
pen and
didn't
paper.
have a typeiwriter, Buzz. He did not use a typewriter.
a laptop now.
Yeah.
I learned. We learned to type
But I know you were doing the same thing I did, which was paying attention to the blondes on both sides, and you didn't get very fast or accurate. This, by the way, has a feature now where you can actually, on your computer, talk into it, so you can talk your thoughts and it'll type them for you, which
like a transcribing,
which keeps it conversational and allows you to maybe keep your thoughts whole and not get lost. Sometimes when I'm writing, I will lose a train of thought because I'm trying to specifically think of the verbiage that I'd like, and then
sure,
and we all edit ourselves as we go, so it's much more natural if you can transcribe it in a conversational way, and I've been blessed.
And that's just an app on your phone,
or on your computer as well.
Wow, that's amazing.
Yeah,
but that helped a lot.
It did.
Do you find when you're going back and you're starting to edit, are you finding that you're going, oh my gosh, what was I thinking that night?
Well, no. What I made a point of doing, and they were very organized. We had I had two conversations with the editor before we wrote the book, because she was very good at probing. Her name's Mia, by the way. Mia was very good at probing me as to what I wanted to accomplish with the book, what were my main themes, how was I going to get those across, and how much of my personal story was I trying to do. Was it supposed to be autobiographical, or was I actually just using some of those stories to make the point as an example to teach larger principles? And so we refined through some of that, and we laid out a preliminary 12-chapter table of contents of what we were going to have me write about. And then we started with chapter 1, which is, how I got into the industry of doing home loans and why it meant so much. And then daily practices to be successful, and then built on that. And then if you're going to build a team, how do you lead? And you can only lead others to the level that you're willing to demonstrate. The thing, it's just like raising kids. You can't raise kids by telling them you can't do that or you shouldn't do that. You show them, because your kids, those little eyes, register how you behave, and those become their behaviors. That's whether you like it or not. That's your example. So there's some of that in the book, and then it builds from that into, team building, accountability, the importance of, some days you're going to be in a funk and you don't feel like doing it, and how practices are going to take you through to do what you need to do in the days that you don't feel like it. So there's some of that in there. And then, it goes on to the point of when you're doing it well, and you've done it for a sustained period of time, whether you've done it well or not, that is your legacy. You're living your legacy today. It's not after you're gone. what people say about you the minute you walk out of the room. That is your reputation, and how that reputation is transferred to the next person when Phil tells you about what he had in a conversation with me. That's what creates the legacy. Right?
Yeah.
That's right.
So
Love
Preach,
it.
Mike, preach.
I guess I am.
I like it,
guess
man.
I
I like it.
Well,
I couldn't agree with you
I don't-
more.
When is it scheduled to be released?
Within the next 4 to 6 weeks. We're in pre-publication now and book design and book cover design, and we're working on the cover endorsements, the cover jacket endorsements.
Now, I notice on this other book you have pictures of yourself. Would it help if we take pictures of all of us and, give you some, really
Some
good
better
looking
material,
guys to have
some
on the
better
cover?
material. Yeah, absolutely.
I'm just trying to help.
Yeah.
I'm all about helping.
Well, I'm sure you're going to make me look a little more youthful than I am, but I'm not sure if you're going to make me look any healthier. I think I'm working out a little more than you are. I'm
Might
not
be.
calling you out.
Might be.
But
You
if-
might be.
Well, on the help front, why don't you give us our mortgage minute for the week here,
Help
man?
us. Help us
man.
all.
Yesterday was quite interesting day. Let's put it this way: we're ending the week better than what we started the week, which
It's our
is
favorite sentence.
yeah, is what I like to focus on. And I know it's a broken record, but it's all about Iran, oil, inflation. Yeah, the problem with oil is that it powers everything. It's not just how much we pay at the gas pump. It's how much the truckers pay at the fuel pump, and then what it costs the grocers because of the fuel prices and the delivery, and it just kind of rolls from there. And so we got CPI and PPI out this week, which are inflationary numbers for the consumer and then for businesses, and both of them are obviously up. Inflation driven by these higher fuel prices. And
the World Cup messing up with our jobs numbers too.
Well, yeah, we continue to see these employment numbers go up, and what a lot of people don't realize is that the number one driver of inflation is employment numbers, and so you've got employment doing really well, which as lenders we're all going, oh dang it. Because that drives inflation more and raises interest rates. So we have all of these different factors out there, but still the number one driver is oil prices. And now overnight we've seen some things in Iran and some stuff like that. Oil prices this morning down below 85 for the first time in 2 or 3 weeks or whatever. So that's helping. They're claiming that we might be seeing a peace deal with Iran. You keep eliminating levels of leadership. At some point, the new leaders
You're
are
going to find
be
somebody
going,
that agrees with you.
Absolutely, we'll take that deal because they don't want to be the next layer to be eliminated, and so all of those things out there going on. Yesterday we had a really good day. We jumped back up right in the middle of the moving averages, which is kind of where the market always tends to want to be. Today we started out when we came into the podcast today, we dropped a little bit, not a tremendous amount, but it was still having trouble maintaining that position. So the good news is, I think that the news over this weekend is going to be different than the news over from last weekend, where, nope, we're going back to war. We're going to bomb the hell out of you. I think today it's like, okay, we're going to stop bombing the hell out of you. Whoever's left over there, better start signing some deals. So I think that we're going to see a better news cycle weekend. Oil prices are down, some things like that. I think that we're on a good trajectory for next week. We'll see. Obviously, it'll take one Apache helicopter to get and I question whether that actually got shot down or not. Those things are kind of bulletproof, but who knows? But it only takes one news cycle like that for it to all of a sudden to escalate again. Yeah. And we've been in that weird range of trading. So
the jobs numbers is weird too with the World Cup. I was listening to, some pundits talking this morning saying that, we're going to see inflated because there was a massive jump, like a 5x jump in the hospitality region. And that's where you look at it. You got the World Cup in North America, and that's going to play a huge role in what we see. And it's going to mess with our employment numbers through September. More than likely.
And you used a word several times, driver.
Yeah.
I submit that the reason the unemployment numbers are so low and so great is because instead of taking the unemployment benefits, you're actually better off to turn the sign on and be an Uber driver or a Lyft driver because you can make $500 a week or $1,000 a week, which is twice what you'd make on the unemployment benefits. So I think the ability to shift into the gig economy has changed those numbers to a point to where they don't really reflect what's going on.
And they actually say that the biggest increases in employment has been in the hospitality and the industry. Yeah. And so lots of stuff going on like that. I don't know. I was going to say,
can I channel Julie Schroyer for us today?
Absolutely.
And not in the appearances in any fashion. I mean,
you were going to confuse anybody. Don't worry about it.
I know I won't confuse anyone. Yeah,
you're just as cute.
But from an enthusiasm standpoint about change, I just want to share. You've had her on the show before, Michelle Kincaid. She's doing a class next Wednesday on Claude and how to make the transition from Claude to Chat and Chat GPT.
Scratch that, reverse it. Yeah, from Chat to Claude.
8 to 9 out of 10 people are using Chat. Most of them are using it ineffectively because they're using it like Google. And we've got classes for that as well. But talking about adding value to people, if you're a realtor or a lender and you want to get your arms around how to actually master a piece of AI to help you with your business, the class is next Wednesday. I believe it's 10 a.m. And you can find it on our
and this is
social media.
She's going to be talking about that Chat isn't the best one, that Claude is better now.
Claude has some features that make it more effective for you if you're attempting to use it to complement your CRM and run your business and use it as an actual working partner, as an additive working partner.
Yeah. Just real quick, tell us how to get in touch with Michelle on that.
Well, just go to Michelle Kincaid on Instagram and DM her that you'd like to be in the class, and let's use social for that.
That's perfect. That's perfect. The last thing I was going to say: did everybody get your SpaceX stock this morning? It's already up. I've already made tons of money.
We've been here for an hour and a half. Maybe it's gone.
Yeah, we don't know. I don't know the ticker yet.
Negative thoughts.
I mean, most rockets that go up do come back to the ground. It's just that he can safely bring them back, which is kind of unique.
Well, crap. So now I'm going to have to go run and see but SpaceX out today, biggest IPA.
IPA is a beer.
There we go.
Happy Friday.
IPA, okay, lunch it's time for lunch. IPO in history. So, that's exciting.
Imagine coming out of the gates and you're now the 6th largest company in the world. Coming out the gates. And the guy behind it is also the controlling interest of the 8th largest company in the world.
Yeah,
I mean that's
that guy's got more money than most countries, on the face of the earth.
It isn't even the dollars; it's the amount of brilliance it takes to manage those ideas and be that forward thinking.
Mm-hmm.
He deserves every bit of the support that obviously the market is putting behind him because he's moving us in directions we couldn't have imagined.
Yep. Absolutely.
Lots of good stuff.
Yeah.
Well,
Phil, wrap us up, buddy.
We are there, man. Thank you so much for joining us today, Mike.
It was fun.
That was a blast. I will expect to get my text about you running JP here in the near future. So,
I wonder if they're doing summer ball.
yeah, we'll have to,
And
make it happen.
we need the book as soon as it comes out. I'd like to buy one of the first ones. So
We'll definitely let
Keep
you know
us-
when we're published.
keep us updated.
You're not allowed to read it. We don't. But that was a fantastic episode. Thanks again for all of us here. That's been another episode of the Blitz Break. Thank you for tuning in. If you're not already subscribed, subscribe to the YouTube channel. Check us out on other social media platforms. And we will see you next week.